We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. I'm Gabe. I'm here with Dane. He's laughing. Are you feeling better, Dane?
Yeah, I just had to lay down for a couple minutes.
Oh, boy.
And finish my protein shake. I had 3/4 of it left, and I didn't realize why I was hungry. I feel good now. I feel good.
Have you guys seen the new Naked Gun movie, The Naked Gun?
I don't know what that is.
I watched that last night, and they were doing an ad for their protein shake. It was called Gorilla Nut.
Oh, yeah.
It's a pretty funny movie. Slapstick humor. It's kind of dorky. But
Mike, do you like the movie Napoleon Dynamite?
No.
No invite from Mike.
Gabe bought.
Don't even talk about it.
Don't talk about it?
You asked
No,
me
you
if-
can talk about it.
You asked me if it was like my favorite movie of all
Yeah, he went to South
time.
Salem.
Yeah, so Gabe bought 10 tickets to go watch Napoleon Dynamite with Napoleon Dynamite.
Oh, no shit.
And he's been trying to find 9 other people to go with him, so he asked the question, do you like Napoleon Dynamite? And
Everybody says no.
No, I said I did like it, but you asked if it was like my favorite movie, and I was like, no.
It is my favorite movie, just for the record.
I know.
So he needs 9 other people.
I watch
to
it
go
every
watch
year
with
on my
him.
birthday.
No,
He said
that
he bought.
movie's hysterical.
Dude, it's in like March, and he bought tickets in 5 months out on the minute it came out.
Gabe's a planner. I love it.
Oh, I had to jump on it, man. The
Bucket
second those
list
tickets
item.
were available, I was
Bucket
all
list
over
item.
it. Yeah, I get to watch the movie with John Heater, and then what is it? John Grease, the guy who played Uncle Rico, and then Ephraim, whatever his name is, the guy who played Pedro. Yeah, those 3 guys are supposed to be there. And I don't know what they're going to do. Talk about the movie a little bit or whatever. Maybe we take some pictures.
They're going to
Where's
sit in
this
your
at?
empty row with you.
I can't believe I'm from Salem and John Heater's from Salem. And I've never met John Heater. Can we get John Heater on this podcast? Will he come?
You should ask
where's
him
the
when you
show
go see
at?
it.
It's at Elsinore.
Yeah, have him the day before. Let's go.
Well, I mean, I don't know where he lives now, but his
Does he do
family's here.
deals?
I don't know.
I think doesn't.
He
Like
should be
he's
one of
smart
our
enough
investors,
to do
probably.
deals.
I think that's the role he plays, but since he like wrote, starred, and directed in that movie, I'm pretty sure he's a genius
Yeah.
That's a good point.
Yeah.
because it is a masterpiece, in
is
my
a
opinion.
masterpiece.
In my humble opinion.
It's
I would
relative.
agree with that. I would agree with that. It's a hysterical movie. The reason it got brought up and why my dad was like, you should go to that, was because Braxton was like, I watched that movie like 3 weeks ago.
Who's
with
Braxton?
My brother.
Oh, did your
Braxton, my
mom have
brother.
Braxton Hicks contractions when she was pregnant? Is that
Watch.
why they named him that?
I think it was a spur of the moment thing.
I mean, nobody
Yeah.
names their kid Braxton.
That is his middle name.
That's strange.
Maybe that's what it was.
And they call him Braxton?
Braxton Hicks McKinney. Yeah.
Oh no shit.
Huh.
No.
I didn't know what that was
That's
until
not
just
his
now.
name.
Is that real?
Yeah,
Is his name-
mom was not
Were
happy
you
with
making
him.
that up?
Wait
Did you
a
know
second.
what his middle name was?
Back up a second. Is his name really Braxton Hicks?
No,
or are
it's
you just
Braxton Blake. Sorry. I can't lie.
You
on the
almost
internet.
had me.
That wasn't
You
me. That
almost
wasn't
had
good.
me. That'd be pretty funny though. That's a
that
good
would be
name for a
funny.
kid.
Yeah.
You should name your kid that.
Did you know they didn't pick? They didn't know whether I was going to be a boy or a girl because I was the third one, and they
Still
already had
unsure.
a boy and a girl. Yeah, that's okay. Well,
He has a mustache though.
it doesn't actually help me that much. And so they didn't know which gender I was going to be, and so they just had 2 names picked out, and it was either
Dane or Daniel.
Dane or Dane?
Daniela.
No, but my girl name was going to be Darby.
Oh,
Darby.
Yeah, man.
We should start calling him Darby.
Yeah, I'm
a bullet there.
I don't know. Darby's memorable.
Holy
I'm going to start
smokes.
calling you Darby from now on.
Well, that's not why I was telling that story.
All right, so the 4 of us are back in here. We got Trevor and Mike and Gabe, and we're just having a
Darby.
great. This is fun. I love being in here. This is great. I got a bad phone call as we stepped out of the last episode that our exchange student just wrecked my mom's car. So
Hey, at least it wasn't your GTR.
I know that's true.
True.
Could
That's
be
true.
worse.
Cars, everybody's okay, so that's good. It's just sheet metal and money. So let's talk about, what do you want to talk about? Deals?
No, so yes, after, but we're going into the new quarter. We're going to do our quarterly meeting. And I was going to text you this last night, but I figured I'd just wait. So we run on EOS and Traction, which you kind of see what we do now. We do the same thing every quarter and month. Could you not do that, Darby?
What are you doing to Trevor? You're
You
moving
just
his
lowered
chair.
his chair.
Moving
down.
my seat.
Okay,
Right.
kids, settle
So-
down.
Sorry.
I wanted to see your thoughts because you thought rocks were stupid. Did
I say that?
Yeah, many times.
Oh.
Do you still think they are? Do you like
That's
them? Or
mean
think
of me.
Yeah.
So quarterly goals.
Yeah, he didn't like those. Do you think they've been helpful with how we've been doing it, or?
I don't know. Have they?
I mean, it moves us forward. I think it's the most important thing we do.
Yeah, you guys like to carry rocks around and stuff, and then we get together and talk about the rocks you carry, and it sounds kind of cool.
But you think it's useful how we're doing that?
I don't know. I don't know.
Sorry, I just
For me,
What's
it's not.
Gabe's
Seems
role?
like some stuff's working.
You know what's funny is they never give me any rocks to carry around.
I was gonna say, like, what's your role? I mean, if you don't have any rocks, then why you don't care?
Yeah, I don't know.
No, Gabe cares.
I have rocks. Do I have rocks?
We gave
I've got to make friends.
That's
with
what I
people.
want to talk about. Dane was missing. Give me 1 second. You guys keep talking. He unplugged my mic, I think, or this other spare one.
Your mic is
No,
on.
your mic's working.
Yeah.
You're just falling apart over there.
No, this is not plugged in.
That's
Oh.
not your mic.
That's your headphone. Your headphones not working? You're the one that said you don't need headphones.
I didn't do that. That was
First day in the new studio.
Darby.
Dane's unplugging Trevor's mic.
That wasn't me.
All right, we're good now. All right. So, coming up, I wanted to talk about yes for you because you're playing more of a role now.
I am.
Yeah.
Did I decide that, or did
Nope,
you decide
we
that?
decided it.
Oh.
And you're on board.
Do you have control over his
Trevor
calendar?
truly believes I don't do anything. Like everybody thinks I don't work for some reason.
No,
That's
no,
not true.
no. I say you work all of the time. Your work is
That's
just
what I tell
different.
people.
It's different.
So I think our problem in the past has been like there's scorecard and rocks. We don't really follow the scorecard. We do the rocks, and the rocks are like this bigger picture. Is it done or not done? And the scorecard is how you get there with actions. And I think now that we have so much staff and people and heads of departments, that each department and each staff member should have one thing that they think about. Is like there's multiple things they can measure, but there's like one thing that we're going to hold everyone accountable to and like track and then help them with if they're not hitting it. And it needs to be the most important thing for each department. Mm-hmm. So I wanted to talk about and get your thoughts on like what are those things. I was talking to Mark a little bit about it yesterday. But I think that's what really starts to propel us forward is like tracking that one thing that makes sense. So for like Mark, I think it should be cash flow. Like he just looks at our cash flow and is it growing week over week or month over month by X percent. Devin, NOI, because that's what he can control. And then Mark's is higher level. And then for you, I think we give you like 5 key people we want you to build relationships with. And then for Dane and fundraising, this is probably what we'll talk about more because I thought it was like amount of people you talk to, like 100 a day. But yeah, tell me your thoughts.
Quality, not quantity.
Yeah.
So I think Gabe is going for the quality and you're going for the quantity.
Well,
Silly.
I mean, I think it all needs to be quality, but Dane is, I think for everybody on the team, it's about, it's like a funnel and everything's got to come in and then it's kind of a backwards funnel though, because by the time it comes to me, you guys got to say, okay, this is what's important for me to do. And you just got to tell me what to do.
Yeah. And I think yours is the couple key relationships we want you to build. But for fundraising, what do you think is the most important thing, Dan?
Just dollars raised.
So that is
That's
the
a
metric.
Scorecard, though. That's
So,
different.
well,
That's what we're talking about. Scorecard.
yeah,
metrics.
scorecards.
Yeah.
Like, what is that key? What is the number, and then how do you track that? Because I was thinking dollar raise too, but that's a harder thing to track
more like
weekly.
dollar per day or dollar per
Yeah,
week.
so I thought that was too hard to track. So I'm like, what is the input that you can track to get there? And the only thing I could think about was the amount of people. You can tell me more. I don't think it's necessarily right. Why I think it's that is because I was thinking for me in acquisitions, I was going to go properties closed, but it's not an input. That's like, the result of an input.
Yeah,
Yeah,
this is
but-
one reason I don't like EOS. Like from a wholesome standpoint, is because your scorecard can get ridiculously large. And how do you create your scorecard? Because your metrics are wide.
Yeah.
So that's why I want to make it very narrow and one specific metric, because we used to do like 3. And then if you're off on one, it would kind of be like, oh, it's okay to be off on all these. So I want one key one that we all track. Each department can have internal numbers that are more detailed and separate.
Yep.
High level, I want one thing. This number matters the most. Mm-hmm. And I think for acquisitions, it goes back to offers sent. I think it does. No?
You can do whatever you want.
Well,
Your
you have-
acquisitions. I don't care.
Yeah, but what is the actual number?
I think it's more about your pipeline. How many deals are we putting in the pipeline? How are we moving those deals through the pipeline, and how many are we closing?
Yeah, so how do you track that from a week to week? Because I thought closings would be good, but like if you're trying to close one a month,
I almost would say that you want it to be deals reviewed, not offers.
So I thought it was offers sent with numbers that fit your specific buy box metrics. So you're not just sending blank offers.
Well, that's different than
but it's offered. The number tracked is offers sent. The criteria is that fit this buy box of these specific deal types that meet these metrics, whether it's whatever structure you're doing. And that's something you can track weekly. And if you take those actions and you're writing enough offers that fit that, you'll eventually land to fill your pipeline, and the result will be deals under contract and close. But I think if you track close, then you're just wishing.
Yeah, and that's where, so you break it down, like you said, your department's going to have more details. And so that's essentially what we did, which is, okay, we want to acquire this many projects. How many leads do we need to have come in? How many seller meetings do you need to have? How many offers do you need to have made? How many offers do you need to have accepted? Yeah. And then you have other metrics like red flags, like how many deals do we need to always have in escrow at a certain given time?
Yeah. So I want to narrow it down, though, from all that to what is the one most important thing we can look at that generates that outcome?
Well, I think that if there's an accountability number for the scorecard, it can be deals under contract or deals closed, deals put under contract or deals closed. And then that you have to look at X number of deals or negotiate, because it's like, at the end of the day, I don't care how many offers you write. I don't care at all. I don't care how many offers you write that have the right terms on the right properties in markets we would buy them.
Yeah, you want
I care about closing deals.
Yeah, correct. But you can't track. I don't think tracking to the closed deals gets you there.
Yes,
I think
it does. You can just do both.
Well, scorecards.
But that's where I don't want both. I want one number.
That's why I'm saying you're accountable for closed deals. You have to know how many offers you have to write.
It takes so long of setting those up and getting there that I think you need a leading metric that's like I can't necessarily control how many deals we close.
I think you can,
but that's not.
I think that's
not at the rock.
You're losing
level.
Accountability
at the rock level. You just want a really generic. Like if you're 60,000 units that you guys want in your 5 years or 10 years,
got to close deals to get there.
Yeah. Exactly. But then you, as the leader of acquisitions, you need to have a whole different scorecard and a whole different metric. So that way you can go to the level 10 meeting, the quarterly meeting, and say, "Here's the rock. Here's how you've completed, on track, off track, right?"
Yeah, but so what is the number is closed deals,
under contract or closed deals.
There's only 3 things we do, right?
I thought there was 2.
We buy deals, we raise money, and we run deals. We're operators.
Yeah, you've got reposition and performing, and so you've got kind of that asset of.
So there's front of the house, back of the house, and there's fundraising. And to me, you can't run. Part of this is about rhythm. So like this, I've had a hard time putting together a good financial statement, like for our brokerage as an example, because I'll spend the same money every single month, but then deals come in waves.
Yes.
And they go under contract in waves, they close in waves, and it's like, oh, did we have a good month or a bad month? Well, that's a stupid thing to say in brokerage or in our business, because we don't really operate in weeks or months. We operate really in years, but we break that down. We try to break it down so we know if we're going along the right path. It's almost like, do we break it up into 6-month chunks or 3-month chunks? So I think the smallest you can break it up into is quarterly.
Yeah. So I think from the end perspective, but to get to the end perspective and you think about the things that need to be done, if you are offering on enough deals with offers that fit your criteria, that's how you get those deals.
No, it's not.
I think you can only track. Dane's only thing he should be thinking about is how many people put money into our bank account today to get to our quarterly goal.
100%.
No.
How many deals do we close today to get to our quarterly goal?
That's too high level. I think you have to think a step back of what is the leading metric, leading input.
So Dane's wrong because he's just not thinking at it from a department standpoint. And you are correct from a department standpoint. And what the disconnect is and the bridge is your
Sorry, I had to use the soundboard.
That's amazing.
Yeah.
He's applauding Mike, telling him he's right.
It's this. Thank you.
Yeah.
That's the mic button.
Yeah.
It's the success rate, right? Like if you're not good at what you do, you have to have a lot more offers out in the marketplace. But if you are very good at your ability to have success and close, right?
Mm-hmm.
Because really what it is it's leads.
Yes.
Your leads are different because you're not doing all off market, you're doing some on market, so offers made are in that aspect. So maybe you don't track leads as much. But like for us, leads matter, but who's taking those leads and their ability, their close rate is significantly more important than the number of leads coming in.
There's always another leading metric. That's why I don't care how many. We wrote, just because this is in my head, in 2023, we wrote over 50 self-help offers and closed 0 of them. That's not helpful. And our metric was offers written, right?
Yeah,
but we weren't performing on it. And the issue is that we were just writing offers. And so when I'm talking about when I'm meeting with you, department head, and we're all as department heads meeting, you don't care if I talk to 1,000 people who have money who might invest in something at some point. You care if I've got the money invested.
Yeah, but as a department head, I
track that. No, I track that.
Sure,
but I'm saying the scorecard metric is not, because if
I understand what you're saying, but you have a rock that is dependent on Trevor being successful, and Trevor has a rock that is dependent upon you being successful.
Yeah.
And so you do need to have an understanding, and you do need to have a level of input of what their lower level scorecards are, so that way you can see, you're coming to this meeting and you haven't met your metric of a rock standpoint. Your rock is off track. But if you understand
he's saying that is the scorecard metric, though. That's not the rock. I'm saying the scorecard metric is deals closed or deals under contract.
For our listeners, explain to us the difference between scorecard and rock.
And that's wrong.
The rock is the primary goal, and the scorecard is
how you get there, how you're getting weekly there. Action.
Deals put under contract can very well be a scorecard metric.
So when you're saying,
if we have to put one deal under contract a month,
I want to track though, like.
You can.
I can track that and I can have influence over it, but to get a deal under contract, you need to take a step before that, and I think that step is more important to track, because now I have full control over that.
You can track hours underwriting
deals. That's how you get ahead of a problem before it becomes a problem, is by having all those other leading indicators that point to what's downriver. And so that's what I'm saying is that river needs to be in place, and you need to be in agreement as an executive team of what those scorecards look like. So that way, if you come to an executive meeting and every rock is off track, you can quickly go into, well, what are your scorecard metrics? And if you understand what they are and you agree to what they are, Trevor can just do a report. He's not having to break down, well, we're not having success here, we are having success here. You can literally look at your scorecard, and then that will tell you, well, no wonder you guys are sucking. You're fucking not getting your leading metrics done.
He just wants one metric, though.
I have
what he's saying.
He wants one at the department level, because you have staff that you have to keep on track.
I think we have one metric that we speak to. There are other metrics
at the executive
under there.
level. Yeah, but the departments need to have scorecards for the team.
I have something to say about our guiding light. I think that using doors is an ego metric.
Yeah,
stupid.
Dan was just
to say we want to be a company that owns 60,000 doors is the wrong. It's the wrong guiding light, because ultimately we're building a company.
Can you do the applause thing really quick? Take him off the booth.
We do the same thing in our management company. It's like, oh, we picked up another 500 doors.
You'd rather have 200 doors that are better performing. I agree with Dane. I agree with you.
Yeah, let's do deals that are good deals with clients we like, and let's do deals that are profitable, where we make money and everybody's happy. Like, I think we're trying to build a company that generates equity, it generates cash flow, and ultimately that's what we're in this for, is to build a company that makes more money.
So the guiding light is stacking performing assets, not just doing deals to do deals.
And not just writing offers to say that you wrote 5 offers.
No, but writing offers that are in your qualified metrics that lead to these good deals, I think is a doable action that someone can take.
I think that somebody underwriting 100 deals a day would make it so that you could write more offers, which would make it so that you went under contract.
Well, that should be one of those.
That's what I'm saying, but those are the little ones. Those are little ones. It's how many deals am I underwriting? How many brokers did I talk to? How many sellers did we call?
So I'm saying, what is the most important metric out of all of
deals?
Those?
But again, your department has various levels of staff. So Trevor needs to come to your executive meeting with, here's the rock, here's my main scorecard that you guys understand, but he has staff underneath them, and they have to have a higher level of
I think everyone needs a number.
You and I are just disagreeing on nomenclature. We just are saying the difference between scorecard and rock. I'm saying that
that's a problem
metric,
with EOS.
I'm saying that, I agree with that. I'm saying that the scorecard metric, not the rock, can be deals put under contract, because we care much more, because once it's under contract, then it's everybody's job to get it closed. But the front end is just acquisitions. That's the thing that we need acquisitions to do, is get it to that point. And there's 100 different things that you can do to get a deal under contract, but you cannot close deals unless you have a deal under contract.
So if we're not buying any deals, whose fault is it?
If we're not buying any deals,
Acquisitions.
It's acquisitions.
Okay, so Trevor has to
If we're not going under contract on any deals.
No, if we're not closing on any deals, it's Trevor's fault.
Yeah.
If we're not raising any money, it's Dane's fault.
Yeah.
If we're not cash flowing, it's Mark's fault, right?
Well, but it is closing good deals is you have to have a volume of offers, so you have things to say
100%.
no
That's
to.
one of the things that should be
you're getting closable deals in escrow.
I think if at the end of the quarter we said, hey, your metric was we had to put one deal under contract every month that was a really good deal that fit our models, that made our returns that we wanted, and you didn't do that, and then we looked at the rest of the things that you tracked, and it was like you wrote 2 offers this quarter. It's like, well, obviously you should have written more offers.
You're talking quality
but
of deal.
That's on him to figure out.
Going back to Gabe, what's a good metric for you guys? So 60,000 units is a lot better than owning all the real estate. So you've gotten a little bit better. But what about something like...
Still an ego metric.
What about something like net stat capital revenue for dollar raised? Something like that.
Or what is the yield on our total portfolio value, so that we know we have to grow the portfolio to be 100 million, 200 million. So this quarter we have to buy $20 million worth of real estate. Did we buy it or not? If we did, great, good job. If we didn't, did we write enough offers? What's the problem? Where's the hang up? Why we didn't close it? Well, we needed to raise 5 million. Did we or did we not? If we didn't, why didn't we raise 5 million? Let's go back and look at our processes to make sure that we're doing what we need to do.
So right now, what I'm trying to figure out, because we're about to do the quarterly meeting and set this and then spend 3 months working on these items, I think what we need to do is, rather than have many rocks, many scorecard metrics, narrow it. Because if you're just thinking about one thing, it's going to get done, versus, hey, we have 5, because we used to be like, we each have 5 scorecard metrics and they weren't set well, they weren't thought out well. So then one wouldn't get done and it felt okay to not do them. Versus like, let's just be accountable on one thing. This is the most important thing. If we know if we take action on this one thing, it will probably work out. It's unreasonable if we take enough reps on this one thing that we will get what we want eventually from doing it.
We want to generate equity and cash flow.
So Mark's is
all
cash.
I care about.
Yeah. So I think Mark's is cash flow, right? But then if you're thinking about that, we have to get enough deals. So we got to target that number. And then what is the action that I need to take? And can I come back to you guys and be like, we wrote this many offers. If I keep doing this action, we will get the deals. So that's why I know you don't like...
We've made it a metric in the past and it hasn't worked.
Because we were writing blind offers, I think, a lot of time, and now we have a much more defined...
Your buy box is so much more defined, And so you're not distracted with the self-help deals, which are the harder ones to close.
We have many deal types we can do, So, but I think there is a quantity metric in there where you can take daily action. I know you really don't like the rule of like talking to more people, but like... If you're like, hey, if I talk to 100 people that have over $300,000 net worth every day, it would be unreasonable. To not.
No, I agree.
This is like the very corporate model. The difference between like an SMI versus a Marcus and Millichap is they'll hire every broker that gets a license. They'll put them in a room, and so you got to make 150 calls a week, and you have to show that you're making those calls. Well, what are the quality of those calls? For me, if I hopped on the phone today with 5 people, I would do a deal. I don't need 150 people. But if you're going to take new brokers who haven't built relationships and they don't quite know exactly what they're doing yet, it's a volume game. You have to play the volume game.
The other aspect of that, and this is why it's so difficult for buying real estate and being an investor to create actual right metrics, because in the Marcus and Millichap model, there's no opportunity cost for them. It's get as many brokers in there to make as many phone calls, to close as many deals, to get as much commissions. But your investment can be a really good investment. It could be a really bad investment.
Yeah.
So you can just try and meet metrics and buy stuff that doesn't increase your yield per dollar raised.
And now you're going the wrong direction. You're working hard to go the wrong direction.
Correct. And I agree with Dane there, where it's like that is an ego metric of 60,000 doors. How I got to the number was like, okay, if we want to have $4 billion,
his ego got got there.
How I got to the number was I saw the largest real estate holder in the world.
Hit that button.
No. I'm trying to think of, because you need something to track to at the end of the day of, did we do this or not? Are we moving forward? Not just like, feels good.
That metric is how you back into yield on raised funds.
Correct. So like I was like 60,000 makes sense to me because we're trying to target $4 billion in equity. So like if you have $12 billion worth of real estate on that, conservatively only owning 33% of the equity.
But why do you want $4 billion of equity?
To be $1 billion company, to generate a certain amount of cash flow.
Correct.
Because the cash flow you're going to make, that yield off the $4 billion
of the return on equity. Yes.
So now it's really yield on portfolio value is one metric.
Well, and there's different types of equity. There's equity brought through the syndication. There's forced appreciation that you create. And there's market equity. And then there's also amortization pay down.
So I think Mark's number, to get one number down, his is cash flow. Like monitoring it from portfolio level. Does this make sense? Are we cash flowing? And is this number increasing at X rate that we want? And we can track to that. And then Devin's,
I would argue with that, not to sidetrack you, but because there's so much out of his control from a cash flow standpoint, management's a big, huge portion of it. For Mark, I think you should be tracking in progress repositions versus performing assets. And you don't want projects lagging in the repositions. You want getting stuff out into the back office. Reposition.
So I thought it would be for Devin at one level lower NOI, and you're making sure your NOI is increasing, which makes sure he's increasing rents, decreasing expenses. And then Mark is looking at slightly higher level from a debt portfolio perspective.
Why is Mark I thought Mark's more on the construction side.
No, so Mark's operations, which includes construction. So properties are performing. That's
so
Mark.
He needs to have team members. He needs to have a Devin under him. Focusing on the NOI. He's the asset manager, making sure the property manager is making the right decisions.
Yep, which he has.
And then he's controlling the construction side to make sure that the construction is, him and Devin are on the same page as far as what construction should be doing to help the NOI.
Correct. Yeah. So I thought Mark's like high level number was cash flow, and maybe because then I want to make it very simple, very thing like, is our cash flow increasing?
Yeah.
Like, because that's
so in
key.
that aspect, if he's focusing on NOI, then so that's the aspect where then that plays into the amount, the capital that Dane is raising and investing, and the deals that you're putting that capital in. Because the better deals you get, the more NOI that he can create, the better yield on the invested capital that Dane's raising.
Yeah.
And
I like this little three-legged stool. What does Gabe do?
So I'm kind of like, they want me to be the face of the company, so like just street cred, personal branding, so getting my name out there, showing people what we're doing, having those meetings, having coffee, having lunch, going to dinner, flying places, doing whatever we got to do.
Closing the big deals.
Like really just to set up and bring credibility to the team when we all go meet.
Public figure type activities.
Yeah, exactly.
Yeah, podcast interviews.
Speaking events, things like that.
So I want Gabe to cultivate the biggest relationships with the biggest sellers, lenders, and investors, and close the biggest deals, because he has a way of doing that better than anyone else on the team.
Yeah. So he's at the bottom of the funnel doing the highest dollar value activities.
Correct. So we funnel it down and he handles that. So that's where I thought from a fundraising perspective, it may, because I agree with you, like, yes, you would rather have quality over quantity. But I think part of it is
both.
Both, because it would be unreasonable for us to not succeed.
Quality is a byproduct of quantity. You see that at the beginner stage so well, that if you don't have a lot of deals, you buy bad deals. If you have a lot of deals, you buy the best deals. And so you have to have a level of quantity. You can refine that down the road, but you definitely have to have a level of quantity.
No, I don't think that it can't be I think that it's your responsibility, though, as the head of that department, to say, okay,
you don't want fake quantity.
The thing I need to do, no matter what, if all that I did was raise X amount of money, that's all I need to do, right? All I need to do isn't just talk to investors. All I need to do isn't just send them the portal enough. All I need to do isn't write good enough emails, have better conversations, understand the underwriting better. I need to do all of that stuff. But if at the end of the day, all I did was raise $5 million, then everybody in our group would look and they would say, okay, I'm happy with that.
I agree.
It is my job to say, okay, I need to have 100 conversations today because we don't have enough investors right now to fulfill this obligation that I have to get $5 million.
Right.
It's my job to do that, though.
A team in your scorecard where you're making sure you have 100%. Enough Facebook ads. Like, do you have enough marketing out there? Is Gabe getting out enough podcasts?
And if it's Gabe's scorecard metric, I need Gabe to talk to 2 people. If it's some kid who's never talked to an investor before, he needs to talk to 200 people.
But him being a public figure goes directly to what your
No.
top of funnel
I'm
is gonna
saying
be.
from the lens of quality
Closing
over
deal on your
quantity.
like
your metric changes based on who it is, the conversations that you're having. I should not forego a 4-hour long conversation that's over lunch where I had to drive an hour and then we had lunch for 2 hours with somebody who I already have the relationship with, who understands investing, who I know is likely to commit capital and a lot of it, in order to make my 100 phone call metric.
What you don't want to do is confuse activity for productivity.
Correct.
And so I had a conversation with one of our new brokers. He's been doing this for a year. He's in the office every day, makes 30 calls a day, whatever he makes. And he's hitting the phones, he's building relationships, he's setting appointments, he's getting listings, he's doing all the right things, but he's not closing deals yet. And I said, well, you need to do all those activities to get there, but don't forget, you don't get paid to make phone calls. You don't get paid to set appointments. You don't get paid to get listings. You get paid to put deals together.
Yeah.
So start thinking in the sense of who's the seller who needs to sell and what does he need? Who's the buyer who wants to buy that deal and what do they need? You bring those two together and you get paid. That's how a broker gets paid. So as a broker, I never got hung up on how many calls did I make and all these things, because I knew at the end of the day, there was no paycheck coming just because I happened to make 30 calls today. Yep. I got paid to put deals together. Yeah. And if you're constantly in your brain, if you're thinking, oh, I went home and I feel good about myself today because I made 30 calls, you're in the wrong business. Yeah. Because you get paid to put deals together.
And that's that is the rock and the scorecard and the forest and the trees. You want to know how many deals do I have in escrow as a rock or as the forest, but you got to have the trees. You got to have the activity to make sure you have stuff in escrow.
Totally.
And you got to keep your eye on both things. And that's where the nomenclature gets messed up a lot. And I think a lot of people fail with EOS is, well, is this a rock? Is this scorecard? It really doesn't fucking matter.
No.
It's just that you're all on the same
and
page.
Do it right.
Yeah. But you do have to see, where am I wasting time?
And to give you credit for this, when you do volume like nobody's business. You do way more volume than everybody else, and then it ends up working out, and that works. That's not how Gabe and I work.
Transactional versus relational.
I'm not transactional. And so we're never going to agree on like which way it should be tracked. And we can't agree because my brain doesn't work like that.
Yeah.
If I'm just going volume, I will do volume, but my brain isn't thinking, okay, I'm doing volume with the end goal of this. If my goal is volume, my goal is volume. That's just that's all I'm going to do. I'm going to be the guy who did 30 calls and then I feel good. But if my goal is volume and then I know that I need to hit this, and then at the end of the quarter we don't hit this, but this was the goal, then I'm going to be like, I don't care.
In your brain,
did my volume.
The dopamine hit for you, chasing the carrot, is not to get the 30 calls. It's to get the $1 million deposited in our account.
Yeah.
And so you've got to get to that final thing because you don't feel like you've accomplished it until the money hits the account.
I think that's the rock.
And I can't make myself do the calls.
And you have... But you will make the calls.
I'll make myself do the calls because I know I have to hit this number
to get to the carrot,
but not for the sake of making the calls. So that's why I can't do it if that's the only goal.
Yeah. I don't want to cut
stupid to me.
I don't want to cut Trevor off, but this is a lot of people at EOS. They miss this part. If you hire an EOS implementer, integrator, whatever the word they use, the first thing they do is they have all your executives take a personality test, and you have to understand how each individual is from a personality standpoint, so you can communicate really well at these level 10 meetings. Because if you don't, that's where you can really fuck up.
Yeah.
You have to have the right personality mix.
Yeah.
And honestly,
for the record, your metric probably should just be writing offers.
And his personality is perfect in acquisitions. Your personality is great in the fundraising. Your personality is great for the face of the company. And Mark's personality is excellent for the operations side. And that's why your momentum has just gone out through the roof, is you are now all in the right roles. And you're getting support underneath you. So
I guess my question for you is, I think you will know the best metric better because you think about the fundraising. Like, I agree the rock is like that $5 to $10 million number, but what is the thing that we can track to know, like, what is the action number we can take that's on a weekly basis?
I need to have more conversations with investors. Yeah.
Okay. But you need to get more dollars deposited in.
Correct. But so I
that's
don't.
all you need to think
all I
about.
need to do.
Correct. You don't need to think about your phone calls.
No.
You need to think about the
and
dollars.
I never do because all that I'm thinking about is the dollars. I'm not thinking about having conversations with people who are going to give me $50K. I'm thinking about the best way that I can nurture the relationship with the guy who I had a phone call with this morning, because I know what I have to do to cater to him. I know the conversation that I need to have. I need to talk to him for 45 minutes about fishing this morning, because that's how I get the dollars in the account. And my goal is to build that relationship because I actually really enjoy talking to him about fishing. And he's a really cool guy and it's fun for me. But I know in the end, that is going to lead me to my goal. And that's why I fit in that position. And that's why it has to be the metric for me, because you wouldn't have that conversation with him.
Yeah. So what is the metric then on top? So it's because what my fear is, and this is what we just did, is let's raise $5 million, we called it, in this last quarter, right? Mm-hmm. We're not going to have $5 million completely raised by the end of the quarter.
Of course we're not. We don't have any deals closing by the end of the quarter. We need dollars in the account before the deal's closing.
Correct.
But we didn't have any deals to close. Our goal is to raise $5 million, and we have $5 million committed.
And that's also the problem with breaking it up per quarter, because our rhythm is not also just magically broken up into 3-month increments.
But I think it will more so be now that we have it rolling, and if we keep doing the actions and the things. Now I'm lining up. So we have closing set for this quarter. So now I'm lining up January, February, March.
And that's why you meet quarterly, is because your metrics change based on performance, right? So you got $5 million in commitments. Now he's got the closings lined up. You may go to $3 million in commitments for Q4 because you don't have as many deals.
So,
but that means you need to be lining up $8 million for Q1.
It's going up.
And it's chicken or the egg. You have to have the deals to raise the money.
Mm-hmm. Yeah,
and you have to close the deals to have the operations. It all goes hand in hand.
And to Brandon's point, just really quick, who was talking about raising money for a deal that we were working on, he was talking about, hey, this thing's 90 days out. There's no way that I can get anybody to do this. Every time I talk to them, they're like, well, how do I'm ready to go. Yeah. It's like, do you know what happens in 60 days, in 90 days? Yeah. By the time they actually need to give me the money, like the momentum's not there. Yeah. And when we're like 115 is what it'll end up being when we actually close it. It's like, no, I didn't talk to anybody the first 15 days.
This is what I love about the idea of setting up a fund to where people put money in and they get to earn while while the money is waiting to be deployed.
Well, because that's why you don't raise it right now. Yeah, is because it's like, actually, I would love for you to have a worse return on your capital. Yeah, I think you should remove it from wherever you have it right now, and then invest in this, even though the project's not going to go for the next 60
as we
days.
Get bigger in scale, you'll be able to take that money early, and we'll be able to pay out a return on it. So that it's better for you to set it with us now instead of leaving it in your money market or wherever it's sitting, and then we will deploy it when it gets deployed, and then it'll explode from there.
No, and I think that's obviously a short-term problem, and I don't think it's something that we really need to worry about. That's something I'm excited for, though.
It's just how you supplement and expand.
You naturally grow to that point.
But you build an investor list, and these are investors, since we are relational, these are investors that we don't want to invest with us once. We want them to invest with us over and over and over, to the point where you have a nice investor base, and some of them come with you on some deals and some on others. Mm-hmm. But when it comes time for another deal, and you go, hey, we want to go buy this $30 million deal, we don't look at it and go, oh my gosh, I don't know if we can raise for that. You go, oh, I've already got 5 people on my phone. I know we get that under contract. Yeah. We already know those people are going to want the deal, and boom, it's done. Yeah. The big syndicators, I mean, they'll have 1 or 2 big investors or one family office that fund all of their deals
every time.
Yeah, and I don't care how we get there, but I would just want to know, like, what is the goal and what is the thing that we can track to and take action on, and that's for you to figure out. And then
I agree. I think my goal coming up, because of the deal size we're doing, because of the investors we have now, we've put ourselves in a better position moving forward to have time to build relationships with more people like the bigger investors, which is what we want to do in the end anyways. That's what we want to do in the end.
That creates your exponential growth.
And that's the exponential growth.
The exponential growth into your metrics today, because there will be a time where your capital raise is going to, like, I was actually going to ask you, like, so compare your capital raise in 24 to your capital raise in 25 to projected in 26. When you get to 28, 29, 30, it's going to be even significantly higher. And so the deal volume either has to increase, or your deal value has to increase. Your property management team needs to increase. Your asset, all that has.
Better company, better deals. Just like when we interviewed Justin Freistadt, and he said, he goes out and he says, "Hey, you want to put $100,000 into this deal?" It immediately becomes $577,000 worth of equity. You got to hand Dane that easy job. I mean, maybe not that easy, but like the better the returns we're offering, and the better the deals that we're doing.
Dane can always say it's a 5x return.
No, actually, that's the thing I'm the worst at. I'm not good at telling people to do things they shouldn't do.
But I mean, making your job easy,
100%,
because it is now. It's not a hard sell. It's just we're inviting you to come in on this awesome deal.
Yeah,
we could do the whole deal ourselves, and we should, but we're doing so many that we're using investor funds to do it.
And as the deal size decreases to the point of the return, or as the deal size increases, and you're starting to do the really big deals, that's when you get access to the bigger capital, right? Yeah. That's when you need access to the bigger
institutional
capital. And so that stuff happens naturally, and you actually don't necessarily need the returns to increase. You need the risk to decrease.
Mm-hmm. Yeah,
and it's market risk, it's deal risk, it's asset risk, and it's operator risk.
Which actually allows you to now diversify your portfolio, because you can go less value add, you can go lower cap, in place cash flows.
100%.
Yeah.
And we're doing our first, like, even remotely, like, not total turnaround, double in a year type deal right now, and it's like, this is actually a really, really good deal. But we're just not used to pitching it because it's a different, or I'm not used to pitching it because it's a different deal type.
Because we like to buy unicorns.
Because we like to buy unicorns. But then when I got into it, I was like, oh, holy smokes! Like, this is actually like it's really good deal.
And it's different. It
is, right? Like, it's a unicorn because of this, or it's just a really good deal because of this, instead of like, we're just going to tear the whole thing down.
And that's understanding what is your metrics and what are you trying to accomplish.
Yeah.
And that's like the hardest thing on this 46 unit for me is when I looked at it in the right framing and the right metrics, when I created my own pro forma and I came up with the same numbers and I saw how we got there versus an alternative, this now makes sense. I get this better.
Mm-hmm. Yeah. So, no, to round it back out, because I know where your brain's at right now. The metric is consistently building relationships, and it means like having lunches. Because that's fine. The other issue is like my metric should be like it's such an intangible thing. It's still numbered, but it's like, okay, was that even a good lunch? Like, I'll leave the lunch and it'll be like, well, I can write that down on the scorecard metric, but that was not like what I wanted out of it. And that's fine, because volume's going to get rid of that. But the
volume
metric
negates luck.
But the metric is, kind of. If volume is the only goal, right? And my issue is that when my goal is volume, that's what I do.
Maybe it's a lower volume. It's that with that type of person, that's completely fine.
This is the goal.
But I think you have that goal and you have that volume metric that you can show that you are taking actions on weekly that really gets it done.
This still is not my goal. I will have it internally as a metric that I know I need to hit in order to get that done.
Every call should turn into either a Zoom call or a coffee meeting or a dinner meeting or whatever.
Yeah.
And every number
I want to hang out with them.
Yeah, and then obviously just making friends is also, that gives you the dopamine hit, and you got to be careful. Just making friends isn't going to get us there.
Yeah.
So some of those friends have to come along with us and invest with us, and then how many dollars end up soft committed, hard committed, put in the account.
Yeah. How many dinners and coffees result in funds added?
Yeah.
I was just about to say that. That's funny, because everybody who we've met with who we knew had funds, everybody who I've sat with one-on-one at coffee has invested with us.
Yeah, right. So if you get that level of success, now you can look down, one of your metrics can be how many coffees do I have, right? Because now that can point.
It's literally every time.
And the longer
if we get to that point and we know they want to invest, it's like every time.
Yeah. And the longer you have a track record, the more you can see and just see, this is dollar.
You're going to drink a lot of caffeine this quarter, dude.
Great news.
21 coffee meetings a week.
Grams of caffeine versus dollars invested.
I love that.
That's your metric, Dane.
I got like 4 minutes and then I got to go. Okay.
All right.
What are you guys using for your investor portals, your software?
InvestNext. It's
what most people use, I believe, that we see.
Is Mike our coach? That's what's happening?
I mean, he spent a lot of dollars on EOS, so I take his input.
Yeah.
How much have you spent on EOS? Like $100,000, probably, right?
Yeah.
So it's free.
Yeah,
you guys are welcome.
There you go. My deposit on this podcast studio.
Mike's earning his keep.
Funny.
I'm trying.
He's doing a good job.
I'm not always an anchor.
No, you're never an anchor for us.
I do have I have 4 minutes. I got to go. Appfolio has an investor portal.
They do.
Which then might work really well on the property management.
They've been hitting us up on that. We use InvestNext. I don't know how Appfolio software works, but they hit us up all the time wanting us to buy their syndication software.
Yeah.
But I think we have enough software systems.
Yeah. And the more I use InvestNext, the more impressed I am with it. Honestly. Yeah. And like any question you have, they have like an AI support and then like a third, like a third party.
What are your thoughts
support?
of going with a quicker, cheaper, easier one to set up kind of now if you're going to have fewer investors just to get?
I think InvestNext is cheap and easy.
It's really inexpensive.
Yeah.
Like dollar amount, I'm not going to.
How much
it's not
is it?
Crazy expensive,
and I think it's the industry standard for syndicators.
It for sure is. Yeah,
that's what you're syndicate.
Well, I mean, that's what Open Door use. That's what Lone Star of like the people who I know of acquire. There's obviously an institution above that, but for the size up to like $1 billion and multiple billions of dollars, they're all using InvestNext. It's super clean. Yeah,
cool.
All right, guys.
Well, let's talk about deals, even though if Mike's taking off.
Oh, you want Mike to leave? We'll talk about deals?
I don't get to hear about
I thought we were wrapping up.
Yeah, we're 46 minutes in.
Deals.
Right?
You got 3 minutes to talk about a deal.
No, we'll just let you walk out.
No, I want to hear the deal.
Well, you can walk out whenever you need.
Out. Get started.
Okay, so we just went yesterday. Yeah, and we were looking at some of the deals we're doing, so we haven't talked about deals for a while. So deals,
we're not even deal junkies anymore.
Well,
let's talk about EOS and rocks and boring macro
It's because Trevor sucks.
economics.
So we're closing on 20 unit October 1st, and then we're closing on a 70 unit October 30th, and then we're closing on a redevelopment of a whole city block November 15th, and then December 15th we're closing on a 66 unit with retail.
Do we have all the money raised?
Yeah.
I think so.
Wow.
Yeah.
So, okay, great. There you got it all, Mike. We gave you our ego. We have a whole bunch of doors. We don't know if they're going to perform or create.
Threw it down on the table.
Are they going to create equity or cash flow for us?
What kind of? So what do you like about each of those deals?
Yeah, so I want to talk specific. So one of the deals was cool. It was just a creative deal, solved seller problem. They're doing an equity contribution. They get what they need. We get to walk into a deal, make it a better performing asset, creates equity growth. Both parties win. Awesome. Dane says don't talk about our one, so we'll keep it broad. Then we're buying a 70 unit that we're syndicating and have all the dollars raised for, and then that's
good.
That's more of a cash flow
Good
play
deal.
with
That's a good deal.
Hey, does that mean you carried your rock?
Yep.
This is so much fun. I love rocks now.
I love rocks. I love when you do retroactive rocks, and then you just get to pick the one that you did right. And then you get a little gold star.
Really good this quarter. What happens next quarter?
Yeah. So that's
what
like
have you done for me lately?
Yeah, that's like a classic value add where you have specific things you can implement of they were self-managing, pride of ownership, but didn't maximize economic value. So it's like a 5-year
lazy reposition.
I like that. Yeah, I like that because we have 5 years on it, but I think we can finish the whole business plan in 2 to 3 and really kill it on it. And I think I'm conservatively underwriting where I'm like, hey, I think market rent is $1,350 upon exit, but I think we can get like $1,450 to $1,500, and then you create another couple mil in value from doing that. Other deal I like because it's conventional value add where it's just dollars spent, work on construction, creates all of the value, and again, conservatively underwrite where I'm underwriting lower to similar units we have 3 miles outside town with worse location on it. Same with the other play where it's self-managed, and it's like, hey, it has some retail and event venue space that we can increase, but even if we don't do that and we just do our normal multifamily value add, it makes sense economically, and we can take it where we create $4 million, $5 million pretty easily over a 5-year time frame, even 2 to 3 again, depending on how aggressively you do it. For sure over 5. And then if you have any market uptake with you, or I'm slightly conservative on these rents, which I think I am, you create another $3 million in value, and then you can add another $2 million on top of that through like having 15,000 of unused space if you're willing to go invest 100 or 200 grand to use that and collect $7,000 a month on it, and then you can go implement rubs, and then you can go and decrease expense and do all those basic things. So I like them because like from a base level of operations, it's really easy to achieve. We can hit the metrics we like with additional upside if we're willing to spend the dollars and take the extra time and effort to do that. So I think downside is removed very heavily from them, where you don't have to do a lot of work to achieve the value, but then you can go spend the time and effort and energy and then really create a lot of value.
I like it.
All right, I fit it all in 3 minutes.
Adios, everybody.
Right, Mike.
That was 4 minutes.
Are we going to keep going or wrap it
No,
up?
I think we're good.
All right. We just had a little 3 minute, like, Trevor's buying a bunch of deals. All right.
Later, Mike.
All right, guys. Deal Junkies, we love you. Please share us. How many listeners do we have now?
I don't know. We had 30-something thousand downloads.
Avery said that we had like a 14% increase last week in listenership.
Way to go.
It had to do with the boys who came in from Oasis Freight, I believe, the Garza family.
They're so
That was a killer episode. If you guys haven't listened to that episode, go back.
I was going to send Mark back to listen.
It's because Trevor wasn't on. Trevor wasn't in that episode.
hey,
and neither was Dane.
I know.
Oh, my God.
It
And Mike
hurts.
didn't even say anything.
Yeah.
So what you're saying is I should just I should host a whole room full of people that are...
Gabe, have you ever considered starting your own podcast?
Oh, I'm looking at the metrics now. We had like a 30% higher.
I'm just saying.
Yeah, we had a way higher listen rate on that than all of our other ones around
All right,
there.
cool. Well, hey, guys, I'm glad you guys are listening to Deal Junkies. We hope you're enjoying it and you're getting something from it. We love you guys, and please share us, and we'll see you next time.